Hello and welcome to this session in which we would look at converting a personal use property to a business use property. Simply put, what does that mean? Let's assume I own this building, then I move out and I do what? And I rent this building. So when I was living here, I was using it for personal use. I moved out and I rented this unit to someone else. I became a landlord, I have a tenant, I have a business, I converted this property into a business use. So the question becomes, when this happens, what is my basis in the property? How much depreciation do I take based on the basis? And when I sell this property later, how do I determine the amount of the gain and the amount of the loss I generate from the sale? This is what we would learn in this session. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true false questions, as well as exercises. Go ahead, start your free trial today. The first thing I want to tell you is this. The rule is similar to assets received as a gift. I just want to set you up to kind of think about the dual basis. So if you viewed the asset received as a gift, you're going to be familiar with this. So the depreciation tax basis for the property is the lesser of the following. So for depreciation purposes, when I want to compute the depreciation, I'm going to look at the fair value at the time of the conversion. Let's assume this property, when I converted it, it was worth $300,000. This was the fair value. If I wanted to sell it, it was worth $300,000. This is the price which the property would change hands between a willing buyer and a willing seller. And this is important. The fair market value at the time of the conversion is important because this is going to be used later when I compute any gain or any loss. So that's why we have to know this. Or the adjusted basis of the property. What's the adjusted basis of the property? Well, let's assume I purchased this property for $250,000. The cost is $250,000. So when I did the conversion, the fair value was $300,000, the cost was $250,000. Let me ask you, if you were the landlord, if you were the owner of this property, which number you would like to use for depreciation? Would you like to use, if I'm asking you, if I'm giving you the option, would you like to use the fair value, $300,000, or the cost? I would say you would prefer to use the fair value. Why? Because the fair value is higher. Why? Because higher fair value gives you a higher depreciation base, which will give you a higher depreciation expense, which will give you a more deduction, which will lead to lower taxable income, which would lead to lower taxes. So what's the rule? The rule is you would look at your fair value, you would look at your adjusted basis, happens to be $250 for this example. You will adjust your adjusted basis for any addition to the property. If, for example, if you put a roof on it, you would adjust it, cost plus those adjustments, minus any depreciation. There shouldn't be any depreciation because you were using this property for personal use. So for depreciation purposes, you would look at these two figures, fair market value versus adjusted basis. And in your depreciation software, you'll put the lower, which is $250, to compute your depreciation as you are operating this property. Now later on, you are going to dispose of this property. It means you're going to sell it. And when you sell it, you either have a gain or you will have a loss. That's how it happens. How to determine the gain or the loss is a little bit unusual, a little bit different. Let's put it that way. So the basis for calculating the gain. So when we have a gain, how do we compute the basis? Because when we dispose the property, what's the formula? What's the disposition formula? It's the proceeds, which is the sales, whatever we sold it for, minus the adjusted basis. This is the formula for selling the property. Proceeds minus adjusted basis. Okay, that's fine. So if we happen to have a gain, how do we compute the basis? And if we happen to have a loss, how do we compute the basis? So we're going to have two different bases depending on whether we have a gain or a loss. If we have a gain, we're going to take the cost of the property minus the depreciation. That's how we compute the adjusted basis. For losses, if we happen to sell this property and we have a loss, how do we determine how do we have a loss? If the proceeds are less than the adjusted basis, we have a loss. If we have a loss, how do we compute the adjusted basis to compute the gain or the loss? We're going to look at the property adjusted basis. You remember my property adjusted basis was 250. We're going to look at the fair market value. The fair market value for my property was 300,000. Then we are going to deduct any depreciation. Choose the lower of these two, then minus depreciation. And this is how we come up with this adjusted basis for the purpose of the loss. Don't worry, we'll look at an example. Now, why is this? Why do we have this rule? This rule to make sure that any loss claimed reflect a genuine economic loss, since you were using this asset for business use. Now, the best way to illustrate why do we use two bases is to work an example with numbers. So let's take a look at this example. Adam's personal residence has an adjusted basis of 240. So Adam purchased this property for 240 and a fair market value of 200,000. Adam decided to convert this property into a rental property, go from personal to business. The first question to you is this: when Adam compute his depreciation using the depreciation tax, so when he computed his depreciation, what is the basis for the depreciation? So what's the depreciation basis? Is he going to depreciate 240,000 or is he going to depreciate 200,000? What's the rule? It's the lower of fair market value or adjusted basis. Fair market value is 200, adjusted basis is 240. He would use 240,000. So when he go to the depreciation schedule to depreciate this rental property, he will use 200,000, not 240. Now Adam would prefer he uses 240 because he had an additional 40,000 he can deduct over the years. The IRS says no. What you're doing is you are hiding your losses into a business property to take the losses, to deduct the losses. Now, what is Adam's gain? What's Adam's basis if he sold this property as a gain? Well, when Adam sells the property, how do we compute the adjusted basis? So notice here, how do we compute the adjusted basis? I'm going to say the normal way. The normal way. What's the normal way? The normal way is you take the adjusted basis of the property minus any depreciation taking. So let's assume for the sake of illustration, we had 5,000 of depreciation taking. Well, if that's the case, first of all, do we have a gain here? If we sold the property for 250, well, we have to compare the adjusted basis to the proceeds. How much did Adam receive? Adam received 250, and the adjusted basis is 240 minus 240, which is his adjusted basis minus 5. So the adjusted basis is 235. So under those circumstances, Adam will have a $15,000 gain. And to answer the question, Adam's basis will be 235,000. Now, what is Adam's basis in case this property was sold at a loss? What is the rule? Under a loss, we would look at the lower of adjusted basis or fair market value minus any depreciation. Again, what's the adjusted basis of this property? The adjusted basis is 240. The fair market value at the time of the conversion is 200,000 minus any depreciation. Therefore, here for a loss, we're going to take the 200,000 minus 5,000, and for the loss, because we sold it at 190. I told you it's a loss, but how do we know it's a loss? How do we know it's a loss? I'm going to compare to 190 to the 235. You compare the 190, the proceeds, you compare the proceeds from the sale, how much you received for this asset, to the adjusted basis, in quote, the normal way, which is the adjusted basis minus any depreciation. And we know there is a loss. However, when you compute the loss, let me change colors here. When you compute the loss, you're going to take the proceeds, 190, minus 195. What's the 195? The 95 is that, in quote, special basis. Not special, but different than the normal basis. And therefore, Adam will take a loss of $5,000. So Adam's loss is $5,000. You might be asking, why do we have two different losses here? Why do we have two different adjusted bases, not two different losses? Why do we have a different adjusted basis for gains versus losses? I'll tell you why, and hopefully you kind of figured it out on your own. If we use the same adjusted basis as the gain, we would have taken 190 minus 235. 190 minus 235. We would have did that. And if we did that, the loss will be 45,000, and Adam will be happy to deduct 45,000 of losses. But we can't do that. Why? Because what's included in this 235 is inflated losses, losses that existed before you converted this property. In other words, what you're doing, if you deducted 235 as the adjusted basis, what you did, the losses that you incurred when this property was a personal use, now you're able to deduct it for business use, which is you can't do that. Therefore, what we do is we compute special basis, and the special basis was 195, and you can only take $5,000 of losses. Otherwise, you can take your personal losses. You can take the personal losses by converting the property into a business use property, sell it, and recapture personal losses. You can't do that. That's why we have two different rules, one for gains and one for losses. That's the whole purpose. So you cannot take advantage of the loss in fair market value prior to the conversion. That's what we are trying to avoid. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following is not adjusted in the basis of the property converted from personal to business? Is not affected. Well, let's see. Improvement made to the property. Will we adjust the property? Yes. If you bought a home, you eventually converted into a rental unit, and you happen to add a roof to that home or an addition. Yes, you will add that to the property to increase your basis. So A is adjusted. B, depreciation taken during personal use. Well, guess what? You cannot take depreciation when the asset is for personal use. So this is not adjusted. This could be the answer, but let's look at C and D. Do we take into account adjust fair market value of the time of the conversion? Well, yes. Fair market value at the time of the conversion is taken into account. Which of the following is not adjusted for in the basis? It is adjusted for in the basis, because we're going to look at the fair market value versus the adjusted basis. And the adjusted basis, part of it is the original. It could be only the original price, or it could be original price plus it could be the original price plus A, which is A, it means improvement, and this will give us the adjusted basis. So yes, the original price is adjusted for improvement. Fair market value also, by default, fair market value changes all the time. If you improve the property, it will change the fair market value. Therefore, the answer is B. B is depreciation is not taken into account, because depreciation, when we converted from personal to business, you never took depreciation in the first place. The other ones are adjusted when we are doing this conversion. What should you do now? You want to go to Farhat Lectures, look at additional MCQs, additional resources to help you, whether you are a CPA candidate, enrolled agent, accounting student. Invest in yourself. Invest in your career. Good luck, study hard, and of course, stay safe.